Meta and Microsoft just released their latest quarterly figures. Meta is down 3%, Microsoft is down closer to 4%. Microsoft was actually up a little bit, but since they only give us guidance during the earnings call, usually that's when the stock starts to move. After hours, stock is down close to 4% because, well, guidance was not as good as expected. We're going to have a look at those numbers later in this video. We're going to start with Meta. So this is basically Meta right now, company close to $1.5 trillion in market cap and a forward PE of just 26 times for a company that is growing as fast and as profitable as Meta. I don't think that's too expensive. And then if you look at price earnings to growth, 1.13, especially if you compare it to Microsoft, 2.45, and Microsoft has a forward PE of 32.9 times. So yeah, Microsoft definitely here more expensive than Meta on all of those metrics, by the way. Price to sales, EV to EBITDA, price to free cash flow, Microsoft more expensive than Meta across the board. So let's dive into this. We're going to start with Meta and then Microsoft. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So as always, we start here with Consensus Guru's great recap for this quarter for Meta. So basically beats across the board, 3 misses, 2 small, 1 bigger one. So the first small miss was revenue for US and Canada, missed by 0.1%. Reality Labs missed by 13.5%. Of course, the revenue from Reality Labs is still very, very small. The losses from it pretty big. Then if you look at ad impressions year over year, that only grew 7%. That's a big miss, missed by 375 basis points. If you look at revenue guidance for Q4, that beat by 0.9%. And for fiscal year 2025, we get total expenses and CapEx. Total expenses beat by 0.9%, basically meaning lower, and CapEx by 2.5%, a bit higher, but there's no beat or miss there. So we'll start with a very short comment by Mark Zuckerberg here. We had a good quarter driven by AI progress across our apps and business. We also have strong momentum with Meta AI, Llama adoption, and AI-powered glasses. Revenue for the quarter increased 19%. I mean, this is crazy. Cost and expenses increased 14%, and so income from operations is up 26% year over year. Operating margin increased from 40% to now 43%. Net income for the quarter increased 35% to $15.68 billion. And diluted earnings per share, $6.03. That's up 37%. Now, looking at a couple of extra things here. So family daily active people was 3.29 billion on average. That's an increase of 5% year over year. Ad impressions delivered across a family of apps increased 7% year over year, and average price per ad increased by 11% year over year. Now, for this quarter, headcount did increase by 9%. I've shown you this in the past. So like we said, revenue increased here 19% year over year. On a constant currency basis, that would have been 20%. So revenue increased that much. Then if you look at expenses as a percentage of revenue, that continues to trend down. So great for the business. Then if you look at free cash flow, record quarter free cash flow wise for the company, $15.52 billion of free cash flow in Q3. That's the most ever. Turning to the outlook here, so we expect fourth quarter 2024 total revenue to be in the range of $45 to $48 billion. Then for the full year 2024 total expenses to be in the range of $96 to $98 billion, updated from the prior range of $96 to $99 billion. We continue to expect 2024 operating losses to increase meaningfully year over year due to our ongoing product development efforts and investments to further scale our ecosystem. As for the CapEx for full year 2024, that will be in the range of $38 to $40 billion, updated from the prior range of $37 to $40 billion. We continue to expect significant capital expenditures growth in 2025. Given this, along with the back-end weighted nature of 2024 capital expenditures, we expect a significant acceleration in infrastructure expense growth next year as we recognize higher growth in depreciation and operating expenses of our expanded infrastructure fleet. And so if we look at this stock right now, small drop, which means we are just under the 20-day moving average. To be honest, to me, great quarter by Meta, good comments on the earnings call, mainly focused on AI. They are going to launch some new stuff starting 2025 with regards to AI creator studio, I believe. And then next year, there should also be the Llama 4 release. Zuck didn't want to talk more about that to reveal more specs. But yeah, I mean, Meta is definitely one of the best AI plays out there. Plus, Llama is open source. So yeah, whoever thinks he's going to make money from this commodity should think twice. Right now, I mean, great report in my eyes. The more it drops, the better. I mean, it would be a great gift if we go and revisit that 200-day moving average. But to be honest, is that going to happen? I don't think so. Moving on to Microsoft, here again, a beat across the board for the quarter. There's one small miss here from unearned revenue by 0.8%. But okay, all the rest here, revenue, all those segments there, gross profit, gross margin, operating income, operating margin, EPS, all beat quite comfortably. So revenue was $65.6 billion and increased 16% year over year. Operating income was $30.6 billion and increased 14% year over year. Net income was $24.7 billion, increasing 11% or 10% on a currency basis. Diluted earnings per share $3.30, increasing 10%. AI-driven transformation is changing work artifacts, and workflows across every role, function, and business process. We are expanding our opportunity and winning new customers as we help them apply our AI platforms and tools to drive new growth and operating leverage. Strong execution by our sales team and partners delivered a solid start to our fiscal year with Microsoft Cloud revenue of $38.9 billion, up 22% year over year. And so, if we go and dive deeper here, revenue in productivity and business processes was $28.3 billion, increasing 12% year over year. So you've got Microsoft 365 commercial product and cloud services that increased 13%. As for the consumer products and cloud services, that increased 5% year over year. LinkedIn revenue continues to grow at 10%. I mean, it's been like this for numerous quarters now. Moving on to the big one, which is Intelligent Cloud. So that was $24.1 billion for the quarter, increasing 12% or 21% year over year on a constant currency basis. They say here, server products and cloud services revenue increased 23%, driven by Azure and other cloud services revenue growth of 33% or 34% on a constant currency basis. As for more personal computing, that was $13.2 billion and increased 17% year over year. Windows OEM and devices revenue increased 2% year over year. Remember, 2025, the end of Windows 10. Then Xbox content and services revenue increased 61%, of course, driven by 53 points of net impact from the acquisition of Activision. Then search and news advertising revenue, excluding tax or traffic acquisition costs, that increased 18% year over year. So pretty good. Now, this, again, I showed you yesterday with regards to Google Cloud, just a wonderful thing to have if your business. Thursday, we're going to see AWS. I expect to see great performance there as well. Here, I mean, incredible business to have, great margins as well. Then for the outlook, this is the guy, Couch Investor on X, tweeting out. If you're not following him there, I highly suggest you do. It's not sponsored, by the way. So Q2 outlook, they expect revenue $68.6 billion for Q2. That's actually a small miss because the expectations were closer to $68.7 billion. Cloud, still same margin around 70%. CapEx increases on a sequential basis. Then productivity and business processes, that segment revenue to increase 10 to 11% year over year to come between $28.7 to $29 billion. Intelligent Cloud, revenue growth of 18 to 20%. So that means $25.55 billion to $25.85 billion. And Azure is expected to grow 31 to 32% year over year. It also said that more sequential dollars are added in this quarter more than any other quarter. And the last one here is more personal computing. That should come at $14.1 billion at the midpoint. And so if we look at Microsoft stock right now, it is coming quite close to the 200-day moving average. So that's going to be interesting to see if we see a lot of buying action or if the market will wait for it to go under and then maybe try and pick it up and rebound above it. We've seen that already happen in the past year. Of course, this was August 5th. So yeah, that happened with plenty of other stocks. But then we saw this also at the start of September. you gone under it, but then directly rebounded above it. So that's going to be quite interesting. Microsoft, as you know, one of the best businesses on the planet. So yeah, if you could get it for cheaper, I mean, why not? So overall, that's all I've got for you right now. Microsoft basically down because of a small miss for guidance, and Meta down a little bit as well. Why is that? I don't know. Probably because headcount is up a little bit, maybe because they're expected to spend more in 2025. Okay, I don't really care. If it drops more, better for me. I can add a little bit more to already one of my top 5 positions in the portfolio. So overall, that's all I've got for you right now. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I see you all in the next one. Bye-bye.